Hey everyone. As I think forward to what the commercial real estate market has in store for us in 2023, the most significant consideration is probably the Federal Reserve. What they do with interest rates this year will have a profound effect on the economy, commercial real estate space demand, financial markets, and the commercial real estate capital market. And one of the top factors influencing the Federal Reserve's decision is the labor market. Basically, the employment market remains airtight and wages have been growing at an annual rate of about 5%. That's about double the normal rate of wage growth, and it's a key inflation element being cited as a problem by the Fed. The upward pressure on wages is largely being driven by the labor shortage. The unemployment rate has been pegged in the 3.5 to 3.7% range since March of last year, and we still have about 10.5 million job openings. Yes, it's likely true that a lot of companies have job openings posted that they're not actively recruiting for, and some sectors like tech, finance, and real estate are beginning to soften. Several firms in these industries have begun to announce layoffs. But not all sectors are softening. Hospitality businesses still face a significant labor shortfall with about 4.5 million openings, while the healthcare sector has 1.9 million positions available. So the softening of employee demand is not all-encompassing. We really do have a substantial labor shortage. A question people frequently ask me is why we have a labor shortage. What happened to all the workers? Was it caused by all the stimulus that was poured into the economy? In answer, consider that the US economy is about $4 trillion bigger than it was before the health crisis. Think about that. Since the onset of the pandemic, the US economy has grown by the rough equivalent of the entire German economy. Second, we've fully recovered the jobs lost in the pandemic, plus about 1.2 million more people are employed today than there were before the pandemic. And third, although the labor force participation rate is down a bit, the biggest labor losses fall into two groups. An estimated 2.4 million baby boomers chose to retire at the onset of the pandemic. More than likely, they won't return to the workforce. In addition, approximately 1.3 million people chose to stay at home to care for others, maybe their kids. Some of these workers will likely return in the coming years, but that may be a prolonged process. And the effect of those labor force dropouts has been compounded by a sharp contraction of immigration to the United States between 2017 and 2020. From 2001 to 2016, close to 1 million people immigrated to the US each year. Starting in 2017, that number began to fall. By 2019, just 570,000 people immigrated to the US, and in 2020, that number dropped to just 20,000 new residents. Reduced immigration contributed to the labor shortage. In the end, the labor shortage can only be solved in one of three ways that I can think of. First, we can solve the labor shortage through technology. For example, a company recently demonstrated a new autonomous food delivery robot at the Consumer Electronics Show this year. Second, we could also solve the labor shortage by finding more labor. We did that in World War II by bringing more women into the workforce. We've also added to the labor force in the past by encouraging immigration to the US. That may already be underway. In 2022, just over 1 million people immigrated to the US. If we sustain 1 million immigrants per year, our historical average, the labor shortage should begin to ease and wage growth could slow. The third way to solve the labor shortage would be by shrinking the economy, by causing a recession. The problem is that the Federal Reserve can't create new technology or automation. They also can't increase the size of the labor force, but they can shrink the economy. The question will be whether they do it, either on purpose or on accident. We'll know more when the Fed makes their next rate announcement on February 1st. But at the end of the day, commercial real estate is a long-term asset and investors need to focus on long-term strategies while they keep their eyes on the horizon.